All right, so welcome back again. You here on lesson 9. So on lesson 9, the role of liquidity on trading. So we're gonna go through a couple examples. The trade that I did today. What is the role of liquidity? So liquidity is form, like I said, is form of money. So the market trying to go those particular areas because there's a lot of money sitting there. But what you want to avoid there is the slippage price manipulations of the price. You would think the price will continue to go a certain direction, but something is switched around. You want to be what you've been looking for of this area. So let's dive in on the role of liquidity. So I'm gonna give you some example the trade that I did today. So I have the market right here. So I can identify the market as always, like I said, identify the market direction. So we are in the time frame of 30 minutes. So we're gonna see where's the direction. So every morning, as like I say, every morning I do this. I check the direction. First thing, direction of the train, what the train is trying to do. So as you can see, we look like we're in downtrend market. So we're gonna switch time frames 15 minutes, 5 minutes, and 3 minutes. Um, I'm gonna identify the areas of liquidity the markets tend to go those areas. So the first one I marked down is like that I see is obvious is like this particular area at the price 19,754. Let's put it exactly. So 19,749, and this is money sitting over here. So this is on the area of liquidity. So the market always is like a magnet trying to go there. It could be going on the opposite side, um, going up. So the market trying to go to these areas. We're gonna switch. So we are in the time frame of 3 minutes. Most of the time, as you know, I execute my trades on 3 minutes. So let's give you the example and play this what you want to look for, what you want to avoid, and display this particular day. So this is all around 9:18. Nice push up. So in this area, as you can see, let's mark this down here. So it break this high, market's trending down, but break this like high low, break this high right here. So it looks like for a lot of traders out there, the market wants to go up. So for me, back in the days, I will set my entry point at this point right here in 1985. I will take a long trade here because think the market is gonna go up, but it looks like. But let's see. I'm still waiting on this trade. I'm still waiting for more market market instruction. What the market's trying to do here. I still have my plan there. I noticed the market's trending down, so we're looking for sure. But at the same time, if it comes down here at this liquidity zone, this form of money, market can turn around. This is a probability, but what you want to avoid is the slippage of price manipulation. So you can have a key smooth trade entry. And always going to be a smooth entry, but you want to look for those areas, be patient on the market. So here we are. We're going to keep playing. So you give the example. When I got in, still waiting. So most trade is here. Let's pause right here. What happened? The ones of going long, pause over here. The ones will go long at this point that because it was going, they get crashed. Market just drop from this point and drop big time. So all those people that were going long, they all got stopped out. So I'm still waiting. So you see how is moving fast. And what I used to do back in the days, I used to chase the market. You don't want to do that. You don't want to chase the market. If you didn't get in, you didn't see the opportunity to get in, just let it go. Wait for the next opportunity because we're looking for probabilities over here. So market looks like wants to go, keep want to go down. So let's see at this point. Looks like want to come back, but as you can see, let's pause over here. As you can see, only touches the liquidity, only touches, and then what it did, it went up. This is the pullback to this area right here. Yes, I could have got in here and take this move from here to this low. Yes, you know, most of my trades that I do, I'm scalping. So yeah, I could do that. Could be risky. Yes, it's risky. So, but I was still waiting. I was still waiting for the to see more price, But I'm waiting the price. I was still waiting at my liquidity. See what I want to see is a swept out on the opposite side going down. So for me to take a trade go long and wait for three to four candles to form to be confirmation this is gonna continue to go long. So let's keep playing here. As you can see right there, that candle, what this candle did, swept this point, swept, slippage, the liquidity, take all these stops out, take this liquidity out, and what it does is like, boom, it come back up, and let's, at this point, we're just gonna mark this down so that we know, at this point, I just wanna mark this down, and this is the key, this is, these candles, check on this, on the sweat, on the liquidity, we got the first confirmation, but not to get in yet. Let me mark this down. So we got the avoid a sleepy price manipulation. And I'm looking for the arrow. There you are. This candle here. So this is nice. Came down, take them out, and boom. But I still waiting for what price try to do here. So I'm still waiting. So let's keep playing. And second candle looks really good. Push up. Now let's stop right here. Now as you can see, I believe I took the trade around this area right here. So when I break this zone over here, so as soon as this candle swept, what the market did, took the liquidity out, the market boom, it went up. What it does is turn around from this point from the liquidity, because the liquidity acts as a magnet price. The price trying to go to those areas and take the money and go the opposite direction. Not always, but keep in mind those are the areas you want to keep looking for. Um, And then I got in around here, and then what price does, boom, push up, come to this high, drop here. I get up at this point. I get out, so I hit my target at this point right here, around here. So I hit the target right here. So this is a good trade right here. Wait for the liquidity taken out. Most traders they went long here. So if they went long here after this, they got stop out. They got this is the avoid slippage. You want to avoid those and then what it does the market and then after that market went up. So wait for that confirmation. Take the liquidity out, and after taking the liquidity out, wait for two candles. This one, another one, the second one. That's where you want to set your trade over here. Put your trade entry trade. So let's just right down here, entry, long, entry long. At this point, I was out, but took those high. Let's keep playing. Boom. It's coming for the other heights right here. Let's mark this down. As you can see, it just touches the other high low. Because remember the train, let's post this. The train is trending up. We see we have a blue lines over here. So it looks like market is trending down, but it went up here, touches it. Let's see what happens. And there we go, and take the high out. So take the high out. That was consolation. It's about here now. It was a good trade. So all those people that were going long in this area, this constellation right here, a little constellation here. So those people that were going long here, they get crashed. They take the lot and they get crashed. Price turn around. Keep playing. Then what the market does, take those out, it went up. And one more time, it's consolidating now. Now you just want to stay out of the market here. You want to stay out of the market. This consolidation market doesn't know what to do here. So this too much going on there. So this is great, great. Did a great trade today. So just want to give you what the role of liquidity and trading is. So this lesson, practice this. Look for these areas, as I mentioned, when you mark down your liquidity. So you got to be patiently waiting for those areas, and so avoid sleep and price manipulation and liquidity. So let's write this down. Liquidity, son of often act magnet for price. And there you have it. So just keep that in mind, and so you can have a smooth trade execution in your entry, but always wait for those opportunities. So that's the role. That's the role of liquidity trading. So this is a great example here. So practice this strategy, practice this to identify these ones so you can get good at it, and then you know you're good at it, and wait for the opportunity to present to you, and then you take the trade. So let me pull up here the my entry. Let's see. So right here. So let's see, go back here. So as you can see, so it was right after taking the liquidity out on the zone 1970-50, and I went on the second candle right here. Second candle, I hit my trade. This is when I moved my stop all the way up to lock on price, look on even the market. If the market comes down, take me out with profit. If it continues to go up, uh, it, it it will hit my target. So this is was the right example, like waited for the right time to get in. So I pulled, there was a good trade over here. So yeah, so here we are in the on the lesson 9, and thank you for watching to the end, and practice this over and over so you can get good at it. And I'm here to help you. So um, and let's move. I will see you. I will see you in the next video. All right. So welcome back. Welcome back again. We're still on lesson number 9. So we're still on the role of liquidity in trading. So I'm going to give you another example for you to keep practicing what to look for on the markets and find out what direction the market's trying to do. So in this case, we're gonna look for short. So first thing we want to do, we want to identify the trend direction, what the market's trying to do. If you try to go, it's trending up or trying to go short. So in this case, we're gonna look for short. So let's go to time frame, 30 minutes time frame. Identify those areas. So I'm gonna mark down. This is, like I say, this is what I do every day. When I come here on the charts, I'll identify the liquidity zones. So we got 1, 2 here, put this right, and then we have another one. This is high, low, high, low, high, low on the train. We are the 30-minute train, and also we're gonna mark down the ones below with areas. Okay, trend direction. We're gonna come here. We're gonna get right. We're gonna mark this trend direction, 2 points right here. Okay, and we're gonna mark this down here, 2 points. As you can see, the market looks trending up. From this point here, it's trending down. So I believe it's gonna continue to go down. So we're gonna look for short. Let's write this down. Let me put it here. Liquidity, high, low. And let's copy page. And then we got that one there. Let's copy. All right, we're gonna go to low time frame, 50-minute time frame, to see if we see any more high points. You see one little high point right here. We're gonna go 5 minutes to go down. And of course I see another one here, so I'm gonna mark this down right here, and I'm gonna bring this down here. Liquidity, high, low, high, low, and I'm just gonna bring this down here. All right, so we have marked the areas we need to be looking for, the probability the trend can shift, can turn around from those areas. So this is where we take trades and look for that opportunity. So let's play this out. a big drop right there. This a lot of traders over here that were going short. So here comes this candle, take them out, whatever who's going short here, um, the sellers, and then whatever who's going on here, these buyers that were going on here, they got stop out with this huge wick right here, and it came down here, wiped them out, and went up again and push up. So I used to do this before. I used to take the trade. I used to get in here when I see this is like manipulate price manipulation. This is where you want to be. Like you will think the market wants to go up. You see this candle right here. It looks like a dodgy candle. I spell that. Dodgy. Please spell like that. It looks like a dodgy candle, but you see how this candle break it break that low right there. So and then how price manipulate here. You know, all the traders going along here, all the buyers, they get crushed by this candle right here. Take them out, and then continue to go up here to crush them out. The ones that are going short. And let's keep playing this. See what happens. All right, price drop again to the lowest point, and then that was a big push up. Break this high. The people, the sellers that were going short at this point, they're getting crushed right here. They getting stop out. Let's keep playing. Wow, look at that. So the price just, when you would think the price will continue to go up at this point, the price just shift from this area, from this high, shift and turn around and just came down here, take all these buyers that were going long, take them out, wipe them out. And then what price does? Continue to go up. See, another thing here, what we're looking at, there's a lot, you see how this wicks, a lot of wicks, there's nothing to trade over here. This is there's a lot of wicks going, this is the killers, they come for those stops, the stake, taking people out, taking all the sellers, buyers, people try to go long, people try to go short, and this the price manipulation. So let's put this down, avoid and price. So avoid slippage and price manipulations because there's nothing to trade in this area, nothing to look for on that. But you want to be looking for your plan, your area where you have marked, looking for that probability. So let me write this down. I'm gonna put it right here. Probability. This is what we're looking for. We're looking for the probability here. So let me put this here. Okay. Let's be more specific with this. Let's use some arrows. Okay. Avoid slippage manipulations. All right, and then so let's keep going. What the price try to do in this case? Push up. It's gonna take this high. Nothing to trade over here. Nothing to trade over here. Just stay out of it. This one. So we're looking for the probability, and this candle comes out. The other one, take them out. So it take these highs. Let's pause right here. Let's move this here. So right here, we got the moving average. So you would think the price try to go. It looks like it wants to go up to these high points on the train, but as you can see, like it right now, it doesn't give me any clue. Market want to turn down, I want to go down. So I'm still waiting what the price try to do here. So let's see what happens. Okay, so there's a rejection here. So you see how, okay, there's a rejection here. Let's see, there's a rejection, this area. Okay, there's a lot of support. You see this on the train, how the train support. So this is really, let's write down support. I think I spelled it right. So we have support in this area, in this zone right here, in this price, 19977. So it touches, jump back up. Okay, this you have to be accurate. Accurate usually time, but you have an idea what we're looking for. Probability over here. So let's see what happens next. Okay, that's good. All right, so wait right there. This is good. Nice push out. I'm gonna take the trade right here. It looks like you know 2 points on top because it's support, and we're gonna hit short. Okay, and then we're gonna put the what will you willing to lose, right? 190, 195. I'm gonna put my stuff there. Remember, you gotta feel comfortable what you willing to lose on this trade, on any trade you make. What is your risk management? What is your risk you want to lose? Feel comfortable with that. And we're gonna move our target. I'm gonna put our target right here. Um, so yeah, so feel comfortable because if you lose, you're not gonna feel guilty about it that you lose that much money. And what are you willing to risk your account? Like 2%, 1%, 3%. For everybody's different. Whatever the account they have is different. So and some accounts are bigger, some accounts small. Whatever when you start in your journey, you want to go. You want to manage your risks, how much you're willing to lose, the lowest as possible you can, so you can keep your account, you can keep yourself flowing and flowing, so you can get good at it. Identify these areas so you can be profitable. So that being said, let's play this out, see what happened from this point. All right, so we're good. The price drop. Okay, still there, nice. I'm gonna pause here. So here, price big drop right here. This is a really nice telling me price is gonna continue to go down, and it looks really good. So I gotta move my stop. I'm gonna move my stop to like lock on price just to be safe, just in case the market switch around on that price. If the market decide to turn from 19,937 going against me, at least I have taken some of the profit, and I don't have a loss. So it's really gonna keep moving my stop as the train continue to drop. That was a beautiful drop, and then hit the target. So he had big drop. This same candle came all the way down. We have our target right here, hit the drop. So what we look for, the high liquidity is right here, and then give me that signal. The market, the 100% certain, 100% no. Sometimes that's why it's really important to have your stop loss, how much you're willing to lose in that trade, so you can take the probability of the trade, of the probability of winning up with the profitable trade. In this case, it was profitable, so we make that $1,000 this trade. This illustration shows you the being patient on the market and look for those areas and manage your stop loss, how much you're willing to lose is really important, because markets can turn around from this point, or from this area, and shift around and go shoot right up and take your loss and have a big loss, and we don't want to do that. So we want to be smart about it. So so thank you. This is a great example, and keep practicing over and over so you can get good at it. Be comfortable to identify these zones and be comfortable to hit the trigger and manage your stop loss. So that being said, thank you for watching to the end. Thank you for watching again. Um, I'm here to help you on your journey, and I hope this was really helpful for you to understand and start practicing on paper, so you can start practicing over and over, so you can get really good at it. So that being said, let's dive in on the next lesson, lesson number 10. So I will see you in the next video.